Hey, good morning, traders. Sound check.
Hey, good morning, Dan.
Hey, good morning here. Yeah, 30 seconds late. I was busy answering a bunch of emails. We're getting I can tell that people are learning. They're asking awesome questions. They've been attending the webinars that we've been doing. A lot of excitement in that. So that's very encouraging. And actually, I'll come back to this AAOI. That was one email I was just answering, but we still have Greg, I'm hearing.
Yeah, it's doing some construction. I'm going to mute it. Anyway, before I close it, there's another question here on YouTube. David wants to know if there are any recommendations or possible trades on Amazon, Baba, and NVIDIA since they're gapping higher.
Okay, so I don't know what. So I guess he's just asking a neutral question. Tell me what you think about a trade opportunity. But obviously, everything starts with a bias of the underlying, and then it's a very, very bullish professional gap to all-time highs. So similar kind of to the Facebook yesterday, that was a pro gap. I don't mind fading them either for a day trade if you get a compelling intraday setup of exhaustion and breakdown. But the gap, both on Facebook yesterday and Amazon today, to me, the gap is too excessive to make a long trade, stock or option. So I just pass on it. I mean, every trade isn't a good setup. But if it's going to maintain its strength, then we want to see how it retraces on the daily and or consolidates to give us a higher probability setup. So unfortunately, right now, I see nothing to do except possibly 30-minute low. If I get a nice double top or ugly first 30-minute bar, I might sell out of the money call spread over the high of the day that expires today. So that's a long answer on that. It's a bullish pro gap, but it's too big really to be on my radar at the open. But I'm always watching the FANG stock, so I will be watching it obviously. Baba gapping up to 178, which is right smack in the middle of this congestion. Nothing to do at the open with Baba. What was the other one? Baidu? Baidu is better than Baba. It's gapping out of this consolidation, but the problem is, see how we analyze all gap trades, see how it's trading pre-market, and then I just mark that off on the daily to say, okay, is there a pattern there? Is there a tradable pattern with a price void? So it's a big gap up, just eyeball it. The stock, this is Wednesday, Thursday. Now it's gapping up here to resistance in the gap fill. So no, but stay tuned because there's a lot better gap plays that I found today. But real quick here, and I'm not going to show you all earnings plays. I cut a couple of them out just because there's so many, and I felt like I was rushing yesterday through the screens too much, so I already cut out like 10 or 15 or so. Spiders here. Same drill every morning. Here's our 15-minute chart. Sold off a little bit into the close, which was fine. Now we have an engulfing bar, 267.18. So we're gapping near the highs yesterday. We're not taking them out, but it's still in a congestion area. So we're just, going to play it by ear. But the ideal place to get on the spiders was right where we nailed it on Wednesday's afternoon breakout. The broader indices are very mixed today because, diverse, different, not in uniform because of earnings. So I just showed you the spiders, which is 500 stocks. And now here's the diamonds, which is 30 stocks. And it's only up, a dime. Actually, earlier today, it was down 80 points. So you would just have to go through the Dow 30 stocks. You know, I can just eyeball my minder of all 30, and I can tell what's dragging it down. Well, Chevron is up $2. Intel, well, you know, just by looking at these, just by looking at my minder, I'm actually shocked that the diamonds are not up more. And here's why. I have Exxon Mobil is my biggest negative, $1.76. On the positives, Apple up 56 cents. You know, that's a big market cap. Microsoft up 334. That's a big market cap. Boeing up, well, Boeing's down $1.50. Well, anyway, so yeah, it's kind of mixed. Let's continue now. Oh, the Qs is up huge because of Amazon. So the Qs are up here 160, 164.72. So I kind of just, you can mark it off here, 164.72. So look, we're gapping way deep into this. If I switch to an hourly chart, you could also see that congestion in more detail. But I just want to go to these gapping stocks right now to, because I did find some nice ones here that we're going to be focusing on in the morning. This actually, I just got an email from one of our subscribers. He says, hey, Dan, check this out, multiple time frames. The daily chart has been in a nasty downtrend, bullish gap, consolidation, wide range bar, consolidation, and it's actually gapping up right now. You can see 34.51, so we need a pullback. You know, the 20 MA is curling up now. The weekly, still in a downtrend, but monthly here, climactic buy setup at the prior breakout. So all three time frames are in alignment. He said, hey, what about selling a put spread on this? I said, I like the pattern. And then what I do next is check earnings. And unfortunately, it's May 8th. So that, you know, kills it. Or I guess you could do May 4. Yeah, May 4 is next Friday's expiration. However, they were crazy spreads. So we can watch this as an equity play on a pullback. So let's continue here. CVX, bullish consolidation with the sector. It's gapping up to 126. You know, just eyeball it here. Still has room. You know, still could go to 128, 129. Pre-market here, I like this wide range bar. So this is a definite watch. Maybe for a put spread or even a swing. It would be ideal 30-minute high or some kind of controlled pullback with a double bottom of some sort. Ideal, we sell an out of the money put spread, 120.5, maybe even 121, and or we'll watch it for the equity. So I'm going to put that in one of my little thumbnails. It looks great. Baidu we talked about. TMUS, I just saw this on the ticker going by. I don't know if I need to check earnings, but look at this beautifulness. Wide range bar back here in April, whatever, on monster volume. You like that defined term? Monster. Just compare that volume to everything else here. Consolidation for 2 weeks in the upper half of this bar. Another wide range bar that closed through resistance. Now, folks, to me, it's irrelevant, and this is another subject we can talk about later when we have more time, but this tail, after this consolidation and this wide range bar closing outside of all of these tails, to me, makes that tail irrelevant, and we'll talk about that lesson another day. Inside bar, so this is a bullish 1, 2, 3. It's sideways here. Oh, 3. Oh, okay. All right. Thanks, Dan. So then we could swing trade it today, maybe. So keep this on your list for a day trade. It's gapping up here to 65.40, which is resistance, however. But it's a watch, either a 30-minute high. Maybe you'll plow through this prior resistance. We have to see how it sets up in the first 30 minutes. Now, I know it's a big old, mess range here on the weekly, but, these 2 time frames is what I'm looking at. Let's continue. Flex. Bearish gap down. The gap is too big for it to be. Look, I can't even see this low on the weekly chart. Something horrible is happening in flex land today. 13. Well, it's right around here then. The 50 period moving average, but it's an ugly gap, kind of similar to the opposite of Amazon being a bullish pro gap, but it's too big for me to trade. This is a bearish gap that's too big for me to figure out what to do at the open. I have to watch it for 30 minutes to see if I get a setup. So I'm going to leave these in my list and come back to them. WDC 88.50. So it's just gapping in the middle of this monster resistance. So I'm going to kill him. You're gone. I don't, why do I want to look at things that the likelihood of them setting up are poor? SYK, this is its beautifulness. It's a pro gap breakout to all-time highs, daily, weekly, monthly. So, and it even looks like a gap down. If this print's real, solid buying. The problem is it's gapping too big again. But, too big is a relative question, particularly when, the buying is just relentless. Like, for example, CMG yesterday. CMG we looked at, we also said absolute beautiful pro gap on the daily, weekly from a reverse head and shoulders looking thing. But, you got to ask yourself, where am I going to get on board and where's my stop and reward to risk? And that's what we determined in the first 30 minutes. And even I missed this one because it was too extended for me. So could this happen to Amazon? It could. It could. We have no idea. Our Facebook came in a little bit yesterday. So Facebook would have been a great 30-minute high play. Well, I can't even say great because it pulled in. No, that was tough. I got to tell you, getting on board Facebook yesterday was tough. But back to psych. Very bullish. I'm going to put it in a minder here in a thumbnail because I like it. That's a beautiful gap play. Starbucks gapping down into this bar. It's a mess. Nothing to do there. Little energy stock SWN 471. So it's gapping up to here. That's a beautiful gap. The target is not going to be huge, but to the low 5s, so percent wise, that's great. So SWN daily, weekly, pro gap breakout. I'm going to watch that too. I'm just putting them in a little thumbnail. PFG. Hold on. PFG, what do we got? I see no volume, but depending on where it gaps and 30-minute high, I like the weekly, the fact that it had this ugly wide range breakdown and now 5 consolidation weeks, but I don't see anything pre-market. This is a mess. I don't see where it's trading though, but it's a total mess here on the daily and weekly. So I'm just gonna X out of him. Intel, another pro gap breakout. Bullish monthly. We've been watching this as a core for a long time, and we've been in it, both the stock and option trades. And we're been looking for a way to get back in, but we didn't want to take the overnight gap risk. but we will be watching this on a pullback now. Gapping it was 57, now it's pulling in a little bit. We need a pullback. HIG, I don't know where it's trading, but if it can get through this, it has a little way to go, but I would prefer resistance being farther away. Fizzler to watch, had a pro gap, pulled in, bottoming tail. It's kind of flat right now. WY, it's just a watch. Here, 110, but it's gapping to resistance, so you're out. XOM, it had a beautiful close, but now it's 78.85. That's a bearish gap. It's still on support now. It's in the middle of this range, but it's negating that bullish breakout bar. So that, that's a bearish gap. All right, I have some more here, but I know Greg's coming on. I'll type comments in here while Greg's talking. X bearish, it's gapping to the, into the support area, but it's still a bearish gap, X, and that's dragging some of the other steel stocks down with it. Our Intuit from yesterday, I'm going to watch that. Expedia had a big gap. I think Expedia's expected move was like $8. So Expedia, Amazon, a lot of options sellers are getting hurt when they expect a smaller move. That's when they get in trouble. Oh, Costco's coming out in 3 days. We have a put spread on that expires next week. How did we miss that? Oh, no, that was the other. Oh, okay. Oh, got it. Thanks. Yeah, Costco, it's retracing here. But see, that's why we didn't trade the stock. No, thank you, Dan. I didn't want to trade the stock in Costco. We just sold an out of the money put spread. And so, yeah, it's light volume here. It's pulling in, but nothing to do. Costco's fine for our put spread. And all our other positions, I jumped over that earlier. They're fine. BMY, I'm still watching this for a climactic. Over yesterday's high is the entry. All right, I'm going to stop sharing so Greg can come on, and I'll just type my other gap comments.
Good morning, everyone. Right, so Dad covered a lot. We'll take, as I always do, take a look at the futures, but I'm looking at here, I don't know how to read this. The gray part here that we're looking at on the small chart is what happens in the overnight session. So consumer discretionaries, this sector is up pretty big. So I'm going to look through some of those stocks after the open, and I'm just looking percentage wise here, what else is up or down. And well, of course, technology with Amazon gapping up and the others. And gold is up a little bit, but that chart's been a mess. So I'm going to look at these consumer discretionaries. When they open up, we'll do that in the other platform. Gold here is just stabilizing. So, gold stocks being up a little bit. It is at the bottom of this consolidation that's been going on for quite a while. So, I don't usually trade these kind of sideways messes like this, but I wouldn't be surprised, and I don't trade them because they typically don't move up with any real momentum. They grind and they make you second guess what's going to happen most of the time. But because it's coming down to the same level again, odds are there's going to be buyers there. Crude oil consolidating and coming down a little bit here. And I guess Exxon reported, because that is in the list over here of losers. And that's a big, ugly down bar there, trading at 78.90. 78.90. So gapping under a breakout bar, which is bearish. It should bring in more sellers. I'll be taking a look at this. Next support isn't that far away, so it's not the best gap, that's for sure. But this might drag down some of the ones that have been really flying in that sector, like Oxy. And I thought last week it was going to turn down from here. When it stalled, it didn't. It continued higher. And now it's got these two candles with the bodies, the opens and closes about in the same area. So we'll see if this can move down. It's not right now, but I'm going to see and watch some of these to see if they do start to. Bonds up a little bit, just bouncing from this slightly oversold move to the downside. It's going to turn up here. Market likes that since it's been so focused on interest rates moving up. So as bonds move up like this, interest rates will come down a little bit, and that will relieve some of the worries that are there in the moment. And it's interesting how, and Dan mentioned this, that the S&Ps are down slightly, not a big deal. They can be up any moment here. You can see in the 24-hour chart, they're just going sideways, whereas the NQs here have been able to push up and they're stalled. But notice the NQs are right up against the 50 MA, which has very good odds of stalling this move here. It's a widely followed moving average, and we'll see how it reacts to that. There's a little bit of resistance there. I know there's some noise here. I can't stop it in a moment. These bars with the opens and closes overlap each other. And so there's a little price resistance there if we would scroll back there intraday and we'd see it. And Dow down a little bit, just an inside day so far. Look, this price pattern that we have in the broader markets, and I mentioned this at the end of the day yesterday when we looked at all of those different sectors on that one page, and pointed out that even though we had a nice up day in the market, virtually everything is sideways to down, on the daily time frame. We really don't have uptrends there. So this thing is still in the process of trying to figure out what it's going to do. And with the weekly charts, looking as they do, last week was a topping tail. Now this week looks like it's going to be a bottoming tail. You've got these opposing forces, and going back to the Qs, we've got this, head and shoulders top formation that, as I mentioned yesterday, if this gets negated on the Qs, it looks more like it will because of the size of this bottoming tail bar. That historically suggests a pretty sizable move to the upside, because this is a distribution pattern, which means not only do you bring in sellers, you're bringing in short sellers. And when short sellers are wrong, they buy to cover, and that will help fuel prices going higher. So that's something that we're going to keep an eye on for sure. As the Qs, get close, and they're relatively close to this area right now, there's going to be some sellers here. So what I think we're going to be looking at the beginning of next week is probably some chopping around and price discovery of can it hold this area? Is it going to pull back? What might it do here to test down below? And let's just go back to the 60 here. So here's part of not a problem, if you will. It's kind of like it's a double-edged sword, if just in a way of saying, hey, this momentum move up is great. It's power. But now there's no support underneath here. There's very little support. What was resistance should become support, the basic type of, analysis. Um, Ideally, well, maybe it just keeps going up toward, right, the old highs. And now we do this and make it a green line so it holds. And then we'll see. When it breaks below here, it kind of opens up the door to a sizable move down, or it has to create some support, meaning a pivot low and then a double bottom. And we'll see if that all plays out. So, all right, we a few minutes before the open, and let me switch platforms and we'll get ready.
Yeah, feel free to ask any questions in the meantime. I'm just reading the journal here a little bit. And one interesting comment right here. Firms feel the impact of oil's rise. American Airlines, remember that one's been dogging? Well, and all the airlines have. It said yesterday, American lowered its profit outlook for the year, citing in part a 12% increase in the average price of jet fuel. And then Triple M also says higher oil is hurting their bottom line. Wells Fargo facing a, I just like looking at headings. I don't care about reading the article, but it says they're facing a 401k inquiry that about them plowing people into things that they shouldn't. And I've been watching Wells Fargo to see if it would make a little bottom here on the daily, since it's on weekly support, for us to give a bull put credit spread. But it's also gapping down here today, 23 cents. But I don't know if this bottom's going to hold. And the big banks have been lagging. We looked at Goldman, JPM, Morgan Stanley. Well, an article here, I didn't hear about this. Husky Energy in Wisconsin yesterday had a big oil refinery explosion, injured 20 people. I don't know if Husky is a public company, but I'm sure, they probably got hit for that. Yeah, and all our opens, as I mentioned, are totally fine. I just posted, we're going to roll. We're sticking with our XLE and Halliburton covered calls. Selling those calls was just perfection to lower our cost basis. And now, XLE should expire worthless at full profit. So we took in another 60 cents, folks, for selling the out of the money, $75 calls. Pure profit, lowers your cost basis. And now and today we're going to do it again. Sell the 75s. And then Halliburton, we're going to sell them, but since that one's holding well, we're going to roll them to a higher strike price. Well, you know what? I said the 5250s, but you know what? If we don't close, depending on the close, I might adjust the strike price that we roll Halliburton to. All right, I'm watching all my, favorites that we talked about. Look at BMY, folks. I think that one's very close, very close. And I'm gonna do a quick little recording lesson with you all later in the doldrums on these climactic patterns. But look, climactic daily, bottoming tails. It's breaking out on the hourly chart. So I'm just timing it with the market, maybe, 10-minute high. We don't do any trading in the first 5 minutes typically. So see Amazon is way off its pre-market high of 1665. So it's, $37 off the high already. And when I sell credit spreads around earnings stocks that expire, today, I'm definitely watching my pre-market chart also for support and resistance. So if hypothetically I sell the call spread on Amazon that expires today, it would likely be at the 1670 strike, which is like $5 higher than the pre-market high. And then the stop over 1665, and you let it roll. But not doing it yet. I'm just telling you what my thinking is.
Just for reference, I just changed that chart to show the pre-market trading there. So when Dan's saying off the pre-market high, you can actually see where it was and here where it opened to. And now as it pulls back into this area, even though it's lighter volume, this is where some buyers should show up.
Fizzler here, pre-market, it was not one of my top trades because I couldn't tell by the pre-market action. But look at Fizzler now. See, I just eyeball all of my earnings stocks, and I'm like, whoa, this one's up $3. What happened? So Fizzler, look, and it's to new highs. That looks great for a put spread. So I'm going to check for next week what we can get paid. And then I just, watch a pullback in the next 5, 10, 15 minutes. And there we have a trade on our hands. Or I can even short the puts that expire today. I mean, they're very spready. But, 76 puts, if this bar holds, for 10, 15 minutes, and we could sell the $76 puts for like 40 cents that expire today, that's $400 just for calling a low in the opening bar. So I'll keep an eye on that, but they're spready right now and it's still not ready. Going out to next week, I could go further out of the money. 73s would be ideal. And it's 10 cents by $1.13. So forget it. The SYK that I like the gap breakout, it's trading very spotty on the 5-minute chart, but I'll still watch it. Nothing to do now. The SWN that I liked pre-market is now 100% retracement. So I've lost interest in him. SWN, no interest anymore, or at least in the immediate future. I see our banks are holding well, KRE. CVX, we mentioned, is a nice pro gap breakout. I'll watch that on a pullback for a put spread for next week. So I would love to do the 121.50. There aren't 50s, so the 122s are only 40 cents. That's not enough juice for me. So the only way around it is if you go further out in time, and then it's the discussion that we had yesterday. Wow, look at that Amazon. So as I told the gentleman pre-market, I didn't have a bias on Amazon because of the pro gap, but now I do have a bias because when you get excessive gaps, you know, you're going to have some profit taking. And if I short a call spread on it, then it's only a day trade. Let me see what those calls are now on Amazon, even though, you know, it's not the entry, of course, but just to show you how elevated they still are. So the 1670s that expire today is $1.35. We could get $1 right now, or $1.20 for the 1680s. So I'm going to watch Amazon on a bounce. The Qs are also gapping up and coming in, spiders coming in. So the mothership, you know, has some selling too, which would support our bear call spread on Amazon or anything. Macy's, Patrick. Yeah, Macy's is a go. Or if you know, it gapped down and then, you know, slung up there. Yes, the pattern is there. Or if you just want to wait a few minutes, Patrick, and see how it settles down on the 5-minute chart with the futures. That's what I recommend. Just hold off. We have selling on the indices, on the hourly because of the retracement. It's a topping tail. So just wait, be patient. That's all. But yes, it is a valid trade that triggered for our subscribers per the rules. And we did a bull call debit spread for a 2-week swing trade. So BMY came back in. See, I mean, you should really do yourself a favor and just never trade in the first 5 minutes, because you can't trust the moves. You can't trust them. When I do the little lesson on climactics, you know, MAN, MAN, was another one that I've been watching. It might be getting close, but it is still not ready. Still not ready. And I'll go over that. Charter, I typed in there, was bearish. Look at CHTR. But again, I you know, don't want to be a Monday morning quarterback. That was a big bearish gap down. So how do you want to get on board? And it's okay to say, well, just short it. And then my next question is, fine. What are your trade management rules? Where's your stop? That's amazing. That charter was $400 in February.
Go back and look 2-3 years ago. You'll be amazed to see where it was.
Really? And then look at that breakout failure.
It looked like it was going to go out of business.
Really? Here, well, then I'll... Do you want me to take the screen?
Yeah, go ahead, since you're talking.
All right, here's our CVX again, just since I have it here. Bullish gap. You know, look at this wide range bar, which is getting deep in here. So I don't have as much confidence as I did earlier, but it's still a watch because it's, you know, it's just pulling into minor support here. Charter. So this was the one I said, you know, bearish gap, all time frames. Even though it's 1, 2, 3, 4, 5, 6 red bars, that's still a pro gap, bearish, because it's gap. You know, these 6 red bars were not climactic. I have declining 20, 50, and it's gapping decisively under everything on the daily and the weekly. You know, lower high here on the monthly. Maybe this rising 50 on the monthly would be a reference point, but it's pain right now. It still looks lower. Oh, yeah, we're supposed to look at the, let me blow this up. Wow. That's what Greg's saying. But see, look at this. I mean, if you're a position trader, core trader, you buy these breakouts and then you follow the trading rules that we teach, which is you trailing under a pivot. So look at this, folks. Let's just trail pivots on this, okay? Here's a pivot, a higher pivot low. Here's 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 one. Here's one. Shoot, that stopped me out right there. So if you just using trailing pivots, if you bought this at 41 bucks and you're stopped out at 160, you made $140 just by trailing pivots. Now, the way it then went sideways in this wide range igniting, you could have gone down, you know, to weekly and daily and got back on board. But now it's, you know, we say the end of trends, when they get extended, they get wide and whippy like this. I mean, just look at it. Just put a big square or circle around all this trading activity, and you can see that it's extended. It's getting far from its major moving averages. And then, you know, this green bar right here is the biggest green bar in this since 2010. So that's a sign of a top, then slowing momentum, wide range igniting, lower high. This was your core entry on a monthly chart. Right under this red bar was your core entry. All right, questions here. Let me pull this up. All right, I see I get distracted a little bit when I want to share so many things with you. Chat box. Or you could use the MA, the blue line. Now, Dan, we as we talked yesterday, we only use moving averages as to help speed up the process, but everything has to be in alignment with the actual price action. So no, we manage trades based upon pivots and support and resistance. And we can come back to that when it's not as busy. All right, spiders were coming in. Now we got a doji tail. It broke out, but now buyers are stepping up. So it's 100% neutral right now. Our Costco turned green. See, remember pre-market, I was not concerned at all. I sent this out in the letter. We have this as a watch, GLNG, just from a monthly breakout. And there's your M turned green again. CVX, still watching, not ready. Let's go through some of these other well, Intuit was from yesterday. Look, Intuit, I don't know if that gap's real or not. It's hard to tell. But if it were to close here, this will be a no-brainer bullish 1, 2, 3 for Monday over the highs of these two bars. Bullish gap, uptrend all time frames, wide range igniting to all-time highs, inside consolidation bar. Now, the reason we love these inside consolidation bars is because not only is it giving us a better entry, but this day is all going to be intraday support over the highs, right? So this is more powerful than just buying over the high of that one bar, because then there's a higher risk of retracement. All right, let's continue. What's old Amazon doing? All right, if it can now bounce and give us a lower high, timed with the future stalling, but it's still a pro gap on the daily. So I got to keep reminding us of that. Similar to Facebook. Oh, somebody asked me about Boeing earlier. Boeing over yesterday's high. You can sell a put spread for next week. But now there's zero setup, long or short. I wouldn't touch it. Over yesterday's high, I wouldn't do the stock because it's an ugly pattern, but we're just doing a put spread, as you know. X, ugly gap, as we said, but it's on support. Could be a little bear flag here. This consolidation, 1, 2, 3, 4, 5 weeks in the lower half of this wide range bar with topping tails. This is a bear call spread candidate. Let's see what we can get paid for the 38s or 38.50s for next week. $38's only 16 cents, but it's, you know, it's far away. So it's a, you know, provided this cannot bounce here in the next half hour, maybe you can even go out further. Let's go out 2 weeks. You can get 32 cents or 33 cents, which is closer to my 1% rule, but you have to hold it for 2 weeks. But this definitely looks lower. Expedia was a big gap. All right, see, it's another pro gap. It's a pro gap. I like this if we can get a bullish double bottom of some sort. Not to trade the stock again, but to sell an out of the money put. Let's see what we can get paid for that. I mean, the 105s would be fantastic, but 105s are 30 by 75 cents. Not enough juice and too spready. Maxim is a total mess. Look at that. Gap down, filled the gap, sloshing around on the rising 200. I'm just deleting him. He's a mess. Stolled is being drugged down with X, but no pattern. He's gone. Clack, a mess. He's gone. Charter we looked at. CVX we continue to watch. I have it on a thumbnail. Clorox. It was a bearish gap. You know, look at this breakdown, all time frames. But the fact that it's green with a bottoming tail, there's no trade here whatsoever because you got resistance. But you know, maybe some of these this cyclicals are starting to bottom since they're so oversold. Hey, what do you think of this? Now it's still in a downtrend. Still in a downtrend, but why did it pique my interest? And it's a bottoming pattern, so higher risk. And I'm not doing it now, but breakdown, deep retracement, higher low than this. The 20 starting to flatten out. Climactic buy setup on the weekly. It's not ready, but you know, I'll keep an eye on it next week. ExxonMobil, total mess. That bearish gap under yesterday's bar we mentioned, but no setup. WY, at resistance, it's holding pretty well intraday, but no trade. He's gone. Fizzler, whoa. Look at that. Now, I mean, would I have predicted that? Absolutely not. But look on the 15-minute gap. Gapped over 3 days of highs. See this? 1, 2, 3 days of highs. After a pullback, bottoming tail, gap fill. It's a long on a pullback, but it's extended right now. So I like that. Let's see what we can get paid for a put spread there, the 75s. Oh, that's the one I actually mentioned earlier, that we could sell the puts that expired today, but they were too spready. I mean, the 75s had expired today. Are oh shoot, it just disappeared. It was 10 cents by 30, and I was about to, pop a 10 lot, for $100. Because what do you think the odds of this trading above $75 are today? Q's though coming in, market stalling here. So hey, maybe we do a 70%. I would say unless yeah, let me look. Unless there's more pending news on Fizzler, like an earnings conference call, like if they say, hey, CEO's coming on at 10 a.m. or a financial officer or whatever, then I would say, no, I don't know what the heck can happen in an earnings call. Provided there's not an earnings call, regardless of the market pulling in, I would say there's a 95% chance this expires. I'm sorry, that it closes over today's open. So, and then I go looking on my option quotes to see if I see some floating around bids out there that people either had an order they didn't know about or they want out for whatever reason. And then I pop them for a nice day trade. I love doing that. Yeah, we're in a spider put spread that expires today, but way the heck here at 260. This now has kind of an M formation on the daily. So let's see about shorting a 267.5. And so Dan, on Monday, we don't like. I don't. It's not a great short pattern. Yes, we're at resistance, and then you also have the weekend gap risk. So I don't know. I mean, I could see it, of course, but you just have extra risk. All right, 267.5. Hey, it's 31 cents right now. Or you can go to the 268s for 18. I'm going to do that. And I'm just stop over the high. All right, well, I hit the bid on a 10 lot, shorting the 268 spider calls. I'm just going to put a stop in over the high, and one or two things are going to happen. I'm going to make $170, or I'm going to get stopped out. And here's the no on spiders. No, Fizzler. I'm not getting Fizzler. I'm not getting any good put, but I'll come back to that. So depending on, let's say I do get stopped out on spiders over the high. Depending on when I get stopped out, because I sold just the 268 calls in the stop. What's the high of the day? 267.34. I'll put my stop 267.41. That's what I'm going to put in my computer right now. And let's say I get stopped out at 3:15 p.m. I can't guarantee you, but I have very high likelihood that I will get stopped out at a profit. Why? Because they're expiring in 45 minutes. Well, actually an hour, because the ETFs and many ETFs continue until 4:15 Eastern. But no, I don't on this pattern. I don't want the risk for Monday. So let me put my stop in before I forget about it. And I'm just going to do market day order, contingent on the spiders trading. I'm just putting a stop on buy market on 267.41. Right, was that right? Yeah, 267.41. All right, let's continue. All right, Fizzler. All right, it's coming in a little bit. Oh, how you set my orders? Okay, yeah. All right, let me show the screen. All right, so let me cancel this and I'll do it over. All right, so I'm going to create a closing order. And this is Thinkorswim platform. And see, if I were to buy it back right now, I could buy it back for 15 cents and I made 20 bucks. So here's how you do it on Thinkorswim. You got to click this little, well, first I'm going to put in, well, you'll do it on the next screen. I click this little wheel. So I'm buying to close, and just pretend this is your trading assistant. What do you want to tell your assistant? Hey, Susie, if the spiders trade over 267.40, just close my short puts at market. That's what I'm telling the computer. So I have a day order. I'm buying to close at market. Day order, symbol is the spiders, at or greater than 267 spot 41. Gonna save it. Confirm, it loads it up here so you can read it again, your order confirmation box. So I'm buying it there at or above 261. Spy. Okay, there you go. So send. There, I'm done. All right, let's come back to this Fizzler. Wow, SYK I had on a thumbnail. So now he's demoted. See? I had him, and when you hear me say a tier 1 watch list, that means, and it's just my definitions, tier 1 means my most favorite, that if they set up the way I like, they're going to be the most compelling patterns and that are going to trigger the setup the soonest because they're ready, they're ripe. So this SYK I have on a thumbnail, he's gone now. He's gone because of this deep retracement. Now, could it trade above the high and then be a big bottoming tail? Of course it could. Of course it could, but the odds are with this ugly retracement, it's not. So why do I want to be bothered with watching it? So SYK, you're gone. Look at this SWN. Same thing. It was a bullish gap, 100%, more than 100% retracement. You're still garbage. You're gone. Starbucks, you're gone. There's no pattern there. Flex, remember, was too big. And I said, I don't know what this thing's going to do. Well, look at pre-market. And there were buyers down here at the 200 on the weekly. Look at this volume. No setup right now. All right, back to Fizzler, because I wouldn't mind selling some puts on him that expired today. Fizzler. Yeah, remember I was looking at those 75 puts that were 10 by 30. Yeah, now they're 3 cents by 30. So I'm not saying anything to do right now unless you try to play market maker and go low offer. But next week, I'm looking, it's just way too spready. I can't, I wouldn't put you all in anything that I wouldn't do myself, but I can't even trade this. It's too darn spready. I'm not playing that game. Because then Greg will have to listen to me bitch if I have to stop out. Oh, it's not. I misspoke when I said all-time highs. See, I don't look at this 10 years of data, but wow, Fizzler was over $300. Wow, but it's breaking out of this consolidation from 2013. That's a 5-year breakout. And let me show you the Intel. It was also, look at this. This is what got our interest on the monthly. Let me show you more data. Look at that. So this is a price void. This is the NASDAQ top, March 2000. But it has been consolidating for 17 years. It's been in a trading range. Well, it actually broke out of this trading range here in 2014, and then it had a higher trading range, right? 29 to 40. But this is why we've been bullish on Intel. Damn, my other tiers, I have 3 tiers. Tier 2 is it needs a little bit more time to get ripe because the gap's too big, or there's some resistance or something. But if it can clear that, then I'm interested. And tier 3 is it's in my watch list day by day, you know, like this PM. And I just set alarms and watch them, you know, day by day. So look at this BM. Oh, this is PM. I'm sorry, not BMY. So PM. Let me look at my hourly chart. Yeah, the hourly chart has a wide range igniting now. So PM is finally ready. Let me see when he has. I mean, it's not ready 100% confident. It's ready on an intelligent, low-risk entry. Because ideally, I would love a double bottom on the daily. But that's going to take a while, right? Yeah, on PM or anything you're saying? All right, we got buyers here now. So now I'm, you know, just this little retracement in the spiders has me concerned, but, you know, I'm only down 2 cents right now. And the daily's still strong. Q's lagging, IWM stronger. Let me check earnings on PM. April 19th. So yeah, the earnings, it's caused that gap down. That's right. So now let's look. I seriously doubt we're going to get anything that expires today, but let's check. I would sell an 81 put. Well, 81, that's $1.50 away. We aren't going to get that lucky. Yeah, the 81 that expires today. Well, you could sell this. Now, see, if you didn't care about margin or commissions, you could sell the $79 put for 5 cents. So 20 lot, there's your $100 for drinks, happy hour. And it's $79. That's far away. So it's just, you know, commissions are kind of your biggest problem there. So let's go out to next week. Yeah, it's just not very juicy. Next week we could do the Wow, they get really spready. So that's going to make it impossible to put a put spread on, is because they're too spready out of the market. I mean, out of the money below 80. You could do the 79.5s or the 79s for 25 cents. Now that's, you know, it's not great for your return on capital, but that's your 5-minute pullback is your entry on PM. Man, still not ready. SKX. It's just much, much sloppier because of this gap down. It's like this is like the guy who fell off the 30-story building, and then he stumbled a little bit more down the street, and then he's you know, just stumbling right here. So I don't know if he's stumbling, you know, to finally make a higher high, higher low, or for another leg down. Yeah. Flex, nothing to do there. He's gone. PFG. Hey, that's a bearish gap and a topping tail. It has this prior low here to deal with, but this would be a bear call spread candidate. Let's see what we can get paid. Yeah, I remember pre-market, I said, I don't know where it's opening, so I didn't have an opinion. So here's, you know, it did gap down. PFG, the 62 calls. They don't have 62 calls. So they only have 60 and 65, so that doesn't interest me. All right, we're getting nice reversals here, so we should go to our, you know, look at this. You know, I was telling you the little possible M top, but now it's it's coming close to negating that red bar. So we should be looking, oh, TMOS. We should be, yeah, see this? Remember the 1, 2, 3 that I mentioned this morning? It's kind of hard to tell if that gap's real. But this opening price right here, this gap breakout, that would have been a good pattern to buy a 5-minute high for a day trade. Yeah, oh yeah, it was up here pre-market where, yeah. I don't know. When you don't have big volume, it's hard to tell. But that was a beautiful 1, 2, 3. Let's go back to our CVX. See, it's daily is still fine. It's a doji bar, but it gapped up, held minor support. I would love to sell an out of the money put spread for next week, but when I looked before, it was spready and or no juice. Let's look again. And also be on the hunt to see if there's any of these puts that we can pop that expires today. The 124s are only 10 cents. That's a little close for me. Not enough juice for next week. All right, XLE, I said to sell the, I said to roll them to the 75s, but because of this bearish gap, I think it's better if we roll them. Well, I want to see what I can get paid. So XLE for next week. And you all help me make this determination, because this is what you have to go through also. So this yesterday's high, 74.67. Should we sell these 74.5s for 90 cents or the 75s for 70. So we're getting 20 cents more, but for for 50 cent less strike price. So it depends on your bias. And for only 20 cents, I'm fine for the 75s. And that's what I posted earlier. And so I'm going to leave it. I was wondering if I had to adjust it or not, but no, I'm fine with 75s. But think about that, folks. That's what we call cost basis reduction. We're constantly selling calls against our positions, time with the chart, to bring in additional premium. So listen, the stock's at 73.94. We are selling a call, giving somebody the right to buy our merchandise at $75. So that's $1.10 away. And we're putting 73 cents in our pocket. And here, let me see if here, I'll show you the whole thing because this is in our Master Trader advisory letter. So if you aren't a subscriber of that, you may not be following, but here, I'm going to give you the whole post. And pre-market, I said to do this under a 5-minute low. So for all of you option traders and covered call and diagonals, just read what I wrote there and tell me if we did a good job or not. So we sold the May $75 calls. I said to do it under a 5-minute low, so that triggered. Five-minute low was 73.85, which is, about where it is now. So I'll say 71 cents a share. So that's lowering our cost basis again. Another 71 cents. And I said, just put a stop over the high for the short calls that expire today. So we're actually, okay, I have a quiz for you all. Since we shorted those for next week, what position do we have on right now? Tell me what position we have on an XLE. What's it called? Dan, you got half of it. Because we have two positions on, actually. We have a covered call plus we're short the naked 75s for today. But why does that not concern me? No, it's not a collar. It's just called a combo. Combo, or I think Thinkorswim calls it a custom or whatever. But it means it's just not fitting the clean definition of, a simple option strategy. So we're long a covered call, that's correct, but we're also short options that expire today with a stop over yesterday's high. So even if we get stopped out, if the XLE wants to take out yesterday's high, it will be at a 97% profit because we would buy them back for pennies.